Alrighty, good morning, good afternoon, good evening, everyone. It's the 7th of May. Uh, just as you see here, I've been closing some trades, the market's been closing trades on my behalf. I'm just going to sit here and wait a couple more minutes. We have news coming up at the top of the hour.
Remaining for the Canadian IV PMI. Also shortly expecting comments from ECB's Nagel.
So the Canadian PMI usually does not impact us all that much, but we do want to keep an eye on this one here. And then within the next 30 minutes to an hour, we'll have more stuff to deal with. All right, so let's see what that does to us, and then we'll get this show on the road. All right, hopefully you guys did not touch your stops, and yesterday's trades would have worked out beautifully. All right, so the stuff we did as a group yesterday survived 36 pips, and it's closing right now. All right, 10 seconds.
63 and 63 for the Canadian IV PMI.
All right, so the Canadian dollar.
We're shortly expecting comments from ECB's Nagel now as well.
Yes, the comments are more important than the Canadian impact on our euro. Okay, so let's take a peek here. Let's see what we're getting ourselves into for today. Looks like an inside bar, 2 days in a row. And so we must assume the mother bar bias. With that in mind, what's our target? Well, if we put a Fibonacci on the recent leg, we end up still looking for a 61% move in that area there. We've been looking at that for a couple days, right? And so let's keep that in mind. 835 or so. It may not happen today, but I'm thinking we might be able to retest the high. Right, so let's go take a peek on an hourly scale. All right, why would we want to be bullish? Well, we're making higher highs and higher lows on an hourly scale. And so we can highlight right there. If you want to, you can put one, at the low. And then if you look into this on a 5-minute scale, all of a sudden you start building a ladder in between these levels, and that becomes a whole bunch of action points that you can maybe plan to anticipate, right? So you're thinking ahead, you're planning ahead, right? And then when the price gets to one of these lines, you're not surprised. It's like, just as expected, right? So instead of jumping the gun and behaving like a deer in the headlights, you can probably have a plan already figured out and just execute your plan, right? And then the idea is to have an exit in mind, just in case your plan A does not work. Right, I'm just using my mind's eye with this. I'm just looking to my left and kind of connecting the dots. Right, nothing spectacular, nothing to see here. Right, it's just now that we have these lines, these call to actions or action point, we have to ask ourselves with a bias, what do we want to do if we get to the next one and the next one and the next one? Well, understandably, I want to remain bullish, and this just gives me an excuse to take a trade, and that's a cheaper trade, and that's an even cheaper trade, right? So what we're doing as the price is moving against our bias is we're taking opportunity to get it for less money, right? It's the probability that we are trading. It's not the direction. Right, we're trading the probability of the next move, right? Comments yesterday in the videos were saying we were martingaling, and it's quite the opposite, right? We're not adding to losses. We're building a position that eventually pays us, We're not doubling the risk. We're spreading the risk that's allocated to this job. All right, so nowhere do we increase the position size because we're in trouble. We're spreading the same click size throughout a range that's allocated for this job over and over and over and over. All right, so we're not martingaling. This is actually anti-martingaling. It's the definition of anti-martingaling. All right, we're not adding to losers. This is drawdown and open trades. Right? Martingaling is doubling your size after booking a loss. Right? So now there's a big difference in the strategy, and in the end, we're trading for the next move. Right? So as we are approaching this support in a down move, a down leg, average size down leg, we are willing to take part in this, not because of the 3 or 4 red candles, but because of where we are at support. Right? So we're willing to take a trade here at support. And if I go find my box, we measure from the top. We happen to be taking a trade near the bottom of the box, which is a high probability of a bounce, right? Because of the distance, so it's a measured move, and the location, coincidentally, it tends to give us a 3-pip move. All right, so we're trading the probability of the bounce, and we get it for cheaper and cheaper and cheaper, and ultimately we know exactly when to stop. Right, 2 days ago or last Friday, when we traded, or when I traded the reaction to the news, I bought the breakout of 08 right there, and I only have 8 trades there, which is half of my normal 16 trades, which I operate with everywhere else. Right, so 8 trades gives me the opportunity to have 72 pips stop instead of 16 trades at 36. Right, so I have 8 times 72 pips instead of 16 times 36 pips, which is what I typically operate with. Right, so the discretion is built into the strategy. You just have to exploit it for what the needs are, what it is you're trying to accomplish here. I'm building and layering in a position for the next move, not the current move, right? I couldn't care less that it has come down from the high. How far it comes down is what I'm trying to potentially take advantage of, right? If it goes 4 boxes, that's normal. If it goes a 5th box, I find myself hedging, which is what we did back here, right? But because I was right there, right, that's hedged. But because I'm still convinced that bullish is what I need to be until I get to that red line, I'm not giving up my bias. I'm not throwing away good trades. I'm not going to flip-flop, flip-flop, flip-flop. I will exploit the drawdown and keep making money until what I get comes to fruition, right? And at the same time, we know where things go wrong, right? We don't layer in until, we run out of money. You layer in, you recycle, and then if push comes to shove, you're stuck holding maybe 16 trades until later, right? And later either goes to your stop loss or it goes to your target, right? I'm still carrying 10 trades, 8 of which are from last Friday. And all the while I've been making money every day, not booking losses, just carrying a little bit of drawdown, carrying $100
Yield on
worth.
10-year US Treasury notes falls to near 3-week low. Last down 4 spots, 6 basis points at 4 spots, 4.427%.
I'm carrying 1/10, 1/10 of a percent. This is minuscule risk compared to what we accomplish because of consistency. All right, so here's me buying again, bottom of the box. All right, so we were up, came back down 3 minutes. I just bought down here. Right, and so I'm trying to get slightly higher. Right, we looked at the daily candle. We saw here, we saw an inside bar for 2 days. Right, so it's a range trade. We either have to break the bottom of the measure bar or we have to break the top of the measure bar for this market to continue doing what it's trying to do, which in this case seems to be making higher highs and higher lows. Right, so undeniable, we kind of have to go with the flow. Right, we have for 2 days. Today is no exception. Right, so when we look intraday, so we've compared today with yesterday and together compared with the day before. If you look at that on an hourly scale or even on a 4-hour scale, for some of you that may be better because of where you are on the globe, time-wise, time zones. This here might be more of a clue as to what we're trying to do, right? We're not making lower lows. We seem to be making higher highs. Right? Look at this here. You have your ceiling, you have your floor. It's clearly a range until it's no longer a range, right? It's clearly stuck between these two extremes. And as traders, we understand we're only here for a couple hours. So on this scale here, what do you think the next couple hours could do? The next couple of candles? Well, they could go back down, maybe back to support, or they could go up and break resistance. Right? And so we already have a bullish lean into this. And so if we look at this on a 5-minute scale, then every time we approach one of these levels, we would probably want to spend a little bit of our cash, the money we've allocated for this job. Right? So it's no longer a surprise, it becomes a job. It becomes something for you to do. It's a call to action. Where does this go? All right, so there we are. Opportunity to buy, number 3. All right, in some people's mind, this is adding to a loser. In reality, these are open trades. I'm building a position, right? I am adding to drawdown. And it's not unlimited. I have a number of clicks that I must respect. I have percentages that I operate within or try to. No, there are times when you have to put the pedal to the metal, right? Your car does do 100 miles an hour. It's the speed limit that slows you down, right? So we understand when it's useful to go a little bit quicker and when it's, not worth it, slow down, like after lunchtime, right? Try to be done before lunchtime. Speaking of which, this morning I have to be done in 45 minutes. Okay, so today will be a short video. We have been winning over and over and over. I will be doing a futures trading session tonight. All right, and so if we look at this on the 15 minutes, this is a lot of trades we've put in these last little while. Right, we follow the same process over and over and over. We have a few losses along the way. Right. Nowhere here are we martingaling quite the opposite. It's click. There's a fourth trade. It happens to be in the next box. I'll switch back to a 1 minute chart. So what I'm looking for, because of me showing up to work at the same time every day, I happen to be playing this pullback right now until the bottom of the hour, right? So until about 8:30 or so. And usually by the bottom of the hour, 30 minutes in from my start time, I have laid in enough trades that I can just sit back and watch them come home, right? Ideally, we finish up here somewhere today, right? That's kind of what we've been planning for the week, right? That was our plan yesterday. That was our plan the day before. That was our plan the day before, right? The bottom has not fallen out yet. Therefore, the upside still remains a target. Right? We're not going to change a plan that's been working. I'll take this, put that here. All right, so if you're so inclined to trade bullish, like I am, this would be trade number 2 in box number 2, and I have 3 trades in box number 1. All right, so those of you following along in the group, we are bullish in this little downtrend here. Right. If you're not sure, check what's happening here, and you want to buy this. Right. If we find our way to the next one, you want to buy that too. All right, so that happens to be the bottom of the box. Right, this. Right there, that's a good clicking spot. That's what I should call the channel, the clicking spot. Those of you following along in the group, we're having some pretty good successes in the last few days. Some scary moments too, right? There's been times when, or for example, just to make things easier to see, I'm using a 15-minute candle just so I can measure all on one screen here. But this was the high from yesterday morning. And so if you started trading yesterday within the group and you held on without touching anything, you survive, right? You survive a 36 pip stop, and your trades from yesterday are now in the money. And that's the idea. We have a long tail stop for a specific purpose, right? It's to survive stuff like this, just these little moves that are outside of what we expect. Right? On this day, this was a news day. We were bullish, 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 and turned bearish after the news, right? Nowhere in here are we martingale. Here we are booking some profits. Let's go back to our 1 minute chart.
So looking out to the fear and greed index, 41 out of 100, which indicates fear, while the crypto fear and greed index is at 68 out of 100, indicating greed. We're keeping an eye on the VIX, which is just up 0.5% at 13.55.
And then just like we do every day, let's take a peek at our dollar index. And lo and behold, we're still below the 200-day moving average, or in this case, it's 200 bars. And so we did have a double top, which is a measured range, a measured move. That measure move delivers a target, a probable target in this neighborhood here, 104.37. 104.40. Right, so if we get down here in the next few days, right, this is a 4-hour candle, so this could be a day or two, right, our euro will have reached its target. All right, so let's just keep that in mind. Right, so in our 5 minutes, our call to action is already making us money. Right, and here you get to recycle those same 2 trades. All right, we just want to close this box here. If we look at the overall, average daily range, if I remember correctly, last I checked, we were about 60% of the way there. We only did today 33 or 34. 33. The average should be 60 or 59. Right, so we're missing 2 boxes somewhere. According to what we have here, we may be able to put 2 boxes on the top. If we start making lower lows, then we might be wrong. Back to 5 minutes. You want to watch it. The average moves are 3 to 4 wrongs, right? So it goes up 3 to 4, goes down 3 to 4, goes up 3 to 4. Sometimes it's 5, sometimes it's 12, right? This is just an averaging game, and everybody's out here looking for perfection. Right? We are not trading the trend. The trend is part of the equation, but it's not how we make our money. Right? There's days when we are counter trend. There's days when we are with the trend, right? But it's not the main objective. I have 8 trades up at the top from Friday, and I have 8 trades down here. That makes it 16. I'm not going to put any more unless we go into box number 3, right? Which would open me up to 4 more. Right? Ultimately, I'm thinking we're going up, and we finished the day near 08 and maybe slightly higher. And anything above 08.15, 08.20, we want to become sellers, right? If you can take a trade, that was a good spot for it, right at support. And then plan ahead. Right, plan B, plan C, plan D, so on and so forth. Just thinking out loud, where would you place another trade, and then the next one, and then your next trade, if you're given the opportunity, right? So instead of looking at this as, oh my God, I'm in trouble, look at this, oh my God, I get to shop. You get to spend money, and it's money that's allocated to this specific job, right? So you're just here doing the job. It's not it's not risking any more than what you hoped for, right? It's actually risking as much as you're allowed, right? So we start small and we build and build and build and build. All the while, it's building one position with one ultimate goal, right? I'm buying on the way down because I will make my money when it finds support, right? Once we find the support we're seeking, all of these trades will close, right? Especially if we are in an uptrend and we are buying at support. Right? We could have been selling at resistance in an uptrend, right? We could have been counter trend trading. Right? Was it worth it today? $1, 1.25 bucks, probably not worth it. Right? I don't want to risk getting caught with my pants down. And that's the issue. If you're trying to catch that trend, it limits your opportunities, and at the same time, depending on that same opportunity, it might be leaving a ton of money on the table. It's preferable if you see the trend, if you understand higher highs, higher lows, and then within this environment, you have measures, upper and lower, and you can figure out if you're playing ping or pong. And then whichever one you choose, you need to remain until you've been proven to be wrong. All right, so I could have been playing the short side until it starts making higher highs. And then in the fifth box, I have to quit shorting. I happen to play the long side, and I'm willing to buy 4 boxes. And in the fifth box, I have to stop buying. Right? I have limits on either side. The direction that I choose to operate within is preferably in line with the bias, but it's not the end all be all, right? You could be counter trend trading. You could be against your bias. We could see the same chart and play opposite directions, right? The reason for the top-down analysis is to eliminate the other 50%, right? So you're trying to pick the best probability, and by doing so, hopefully, you don't have to trade the low probability, right? But if it's like 60-40, and you pick the 60, you may spend your whole 2 hours in that 40% low probability end of the spectrum anyways, right? So it's trying to figure out what's the most probable direction for today. And then by the time you are looking at your 1-minute chart and the facts are telling you something very different, or exactly what you thought, you are trading the facts. Okay, so it sounds like it's double speak, but it's what we're trying to do, right? This is a range within a range, and you have to see the value of the range, and then how much of that value can you extract, right? And so if you're at the top of the inside and you're at the bottom of the outside, you have a lot of runway, right? So if it's a range within a range, right, this is a 1-minute range, and it's within this range here, which is about 6, 7 minutes, 8 minutes, 1, 2, 3, 4, 5, 6, 7, 8 minutes, right? So a 1-minute candle is within an 8-minute range, and that 8-minute range is within a 39-minute range. You see what I'm saying, right? It's a trend within a trend, or a range within a range, right? The candlestick itself has a high and a low, right? We are trading ranges. And by buying at the bottom of the range in a bullish environment, you're getting the better deal. Right? You don't want to be buying at the top, preferably, because now you're just expecting it. You want it to go higher. You need it to go higher to make your money. When you're buying at the bottom, you're within the range, right? You just need to revisit the high. Right? So you don't need a breakout to make money. All right, so just it's positioning, it's location, it's where you are within all of this. How many clicks do you have left? And where's the best spot for them, right? The best spot for my clicks is at the bottom of the box if I'm trying to be bullish, right? Just like I was clicking down here at the bottom of this box. All right, a range within a range. It's okay to pick one direction, the overall direction, and then trade something else within it. Just understand where the limits are, right? My limits are 4 boxes.
Global debt to GDP ratio on the rise after 3/4 of declines.
Right, and so I have limits above and below, and then within the boxes I have limits.
Climbed by $1.3 trillion to record high 350.
I have 4 clicks per box, and those clicks themselves are not random. Each click is the same size, which basically 1/4%, and it's just the same thing repeated over and over and over. Right, we add. Right, we build a position, we add to draw down. This is not doubling up on a loss. That's far removed as you can get. People just don't know what they don't know. A lot of people need to go back to baby pips for this stuff. The definition of a loss is a closed trade. What we're learning to do is engineer an exit. And like an insurance company, that's not free, right? So you have to spend a little bit of money to kind of like steer things your way, right? To spend less money in the end. All right. So those of you that have been following along, you've built up about 8 trades or so, 8 or 9 trades. And we're still looking for an outcome to the upside, right? Somewhere around 810, 815. We want to become sellers, right? Somewhere up here, right around here. Right, so we are 1, 2, 3 boxes away from the high. Right, if we get 3 more boxes on top here, box number 4 and such, we want to be sellers here. Right, so this is all green. And then when we get near the top, we want to become sellers. Right, in this area here, I'll put that one green, but oops, sorry. I want to put that one green. We have to, it's almost like a yellow box, right? It's half and half. And then above here, it's all going to be red. Right? Not because we don't think it has more bullishness to come. It's because by the time we get here, it will have fulfilled the average daily range. It will have broken the previous high. And so it is complementing what the market's trying to do, right? Higher highs and higher lows. And as such, it gives us an opportunity to play the wick at the top of the daily candle. Right? It's just thinking out loud, right? Anything can happen. This thing could just go right down to the bottom, right? So just get yourself ready for alternatives and then trade the facts, right? Imagine the 5-minute chart as the navigator in your rally car, right? And the navigator is watching the map, and the map says, hey, there's a turn coming up. The driver of the rally car will probably see the turn in their windscreen and be able to do the right thing. You'll be able to do exactly what you need to do because you saw it it's in your face. Right? This guy warned you about it, and here the box lets you see it. This is a green box. Right? So we're willing participants for 4 boxes of drawdown, right, before we have to quit. Right? I doubt very much we'll need this, but plan ahead. You never know. All right, so if you have a click to spare, now's a good place. I'm 1 trade over now. All right. Sneak a peek on a 4-hour just to see what it looks like. I don't spend enough time on this 4-hour chart because I'm usually here for only a portion of the 4-hour candle. Right? I'm usually not here to see the close of the 4-hour candle. If I am, I'm not participating. So this is interesting to keep an eye on, right? Because it does lean into your bias idea, and it does kind of show you if you may be leaning in too hard, like things are changing. Right? There's a rug pull taking place, that kind of stuff. Understand what an average 4-hour candle looks like. The average 4-hour candle, this is kind of a low side of the average. It should be closer to 27, 3 boxes. Right, so the shrinking volatility lately has been shrinking our averages also. Our expectations have to adjust. Don't think you're going to get 200 pips on the swing trade when the market is only doing 60 pips per day. All right, so with these units of measure, we're just sitting here now, ready to catch it, and measure 1 box at a time. We just want to be expecting 1 box at a time. Otherwise, we become swing traders, right? My 3 pips is what builds consistency in my behavior, right? Because it forces me to recycle the trades, and every time I recycle, it's an opportunity to double check to make sure this is still working, right? If all of a sudden things are slipping, don't recycle, walk away, leave the casino. And that's where we learn that time comes into play, because right around lunchtime New York, you find yourself wanting to leave the casino because the bars are shrinking. What was easy money an hour ago is now getting harder and harder, right? And now look, we've just passed the bottom of the hour. We've just passed the bottom of the hour, somewhere around here. 8:30. And now we're looking for a move back up. right? So from here, I'm looking for a move up, and that first 30 minutes allowed me to do this, right? I built a long position on the down leg, and now expectations and probabilities, I'm looking something like this, right? Anything can happen, but this here would be awesome. All right, let's change this to yellow. All right, and now that Mr. Market knows my plan, watch, he's gonna put a stick in my wheel and have me trip over my handlebars. All right, so we started our expectations and our positioning here. All right, so that's 1 hour of layering in. And then the next move is where we tend to get paid, right? We've postponed gratification. A lot of people would have seen this as a downtrend, and a lot of people would have been selling this on the way down, right? There's nothing wrong with this. If it makes you the 3 pips you're looking for, go right ahead, right? But I need to be trading the next move, right? Not the current move, because the current move comes to an end. And that usually has me holding the bag. Whereas if I plan for the next move, all I'm trying to do is try to find where it starts, right? Did it start here? Clearly not. Did it start here? Or here, or here, or here, or here? Is it starting now? Maybe it starts here. Right? I'm just trying to figure out where it starts, and I only have so much money to find out with. And if I happen to run out of money before I find this, this is when I'm screwed. All right. But until I run out of money or this never comes, I'm perfectly fine. All right. It's 4 to 5 clicks per box, the same value per click. It's based on probabilities and, the options that we have in front of us. The goal is from a top down, not a bottom up. And ultimately, all you're trying to do is get paid, right? So you're willing to put a little bit of money on the line because in the end, you think you might be right. And a lot of folks don't see that, right? A lot of folks, they're trying to make their money right now, right? I take the trade, I need to be right now. That is awesome if it works, right? That's what we do here. I bought support and boom, it worked right away. That's kind of what I'm looking to do. But once I find support, all my trades will close, not just one, right? So I do want things to work in my favor, but I also have an opportunity to spread my risk cheaper, without giving hope, without losing faith in my bias, without losing faith in the trade itself, right? I just layer in the money that I have access to, dedicated to this job, right? So it's not like I'm borrowing from Peter to pay Paul. It's not like I'm second mortgaging the house. Right? So our expectations are around this circadian nature of the market. Right? The circadian approach that I follow, this leg here, this hour that I built into, it's something that I've come to recognize because of time of day. Right? The next behavior that should come from this is something that I've seen happen over and over and over and over. Right? We have a pullback, and then the continuation. Right? It's extremely rare. Well, it is a probability, but it's a low probability that this be a reversal. Right? It's just timing and the lack of catalysts, our calendar, so on and so forth. We just don't want to disrupt what's already underway. If you have a trade to take, now would be a good place. Looking left. I'll be posting yesterday's video probably today, now that we've closed the trades. I have more reopened, but those are today's. Some awesome feedback on those videos, and some people also clearly need to go back to baby pips, but that's okay. It's almost London fix in about 14 minutes or so, 15 minutes. I'm gonna have to let you guys go. I have an important appointment to get to. All right, so with the position that we have stop losses. Right? Don't touch your stop losses. Leave them where they are. Hide them. Change the color to invisible so that they don't freak you out. The goal is the same, right? We want to go up 3 to 4 boxes like we normally do, and then become sellers. Looking at this here, I'm curious to see what if we did something like that. What's been happening? 50%. Right? There's room to go down a little bit more. It wouldn't be panic if we did go down a little bit more. Beautiful. I'm going to take one right there. See what happens in the next 10 minutes or so. We should find a low, maybe somewhere here. And then if that is the low we're looking for, if that is support that we're seeking over the course of time, so in the next hour and a half while the banks are still open, there's a high probability that we keep going up. Right? And then ultimately the banks in Europe will close, and then you and I in North America are left wondering what to do with the euro. All right. So we have our plan, we have our marching orders. I'm just going to let you go, right? And I'll see you tomorrow morning. Same time, same link, same everything. If you haven't done so already, subscribe to the channel. I'll keep updating, keep uploading, all that good stuff. And whatever you do, don't touch your stop losses. All right. if anything, if you have to walk away from your computer, you know, maybe move your targets to break even, but don't touch your stop losses. And yes, I'll be doing the future session tonight at 9:30 Eastern. 9:30 Eastern, same bat channel. Talk to you guys later. Thanks. Bye-bye.